this is the chart for soybeans. Now, what we've identified is a very small inverted head and shoulders just to show you the technique we use to get projections. Now, we had a miniature downtrend and put in a higher low, which caused a bit of a rally before the market pulled back a little bit. So it's not been the easiest chart to trade. However, we've got here what we have drawn in as a midline. Now, this has been a little bit complicated by the sort of penetration we had here and here, but all in all, we are very satisfied this is the correct line because the market really does, you can see it really tries to get above, breaks down after it touches it, and then again struggles to get back above that midline. So that is pretty much, and when we do get above it, we pretty much go on a good rally. So that is what we would call our midline, and that is what we're going to use to get a projection. The technique that we would use, first to identify the shoulder, the head, and the right shoulder. We need to look at the highest formed shoulder, which would be the first shoulder formed in this case. We need to measure from the midline down to the low of the shoulder, then use that same distance at the point where the midline was broken and extend it upwards. That would give us the price target for this inverted head and shoulders. And you can see the market pretty much just got above that target and then broke downwards. The projection is also at a already established resistance line. You can see how many times the market has respected this price as a support or a resistance. So when trading the rally from this breakout of the inverted head and shoulders, you would take your profits at that line. A little word of warning, in established downtrends, small inverted head and shoulders can be continuation patterns. You can see here on the gold chart, it's formed an inverted head and shoulders. We haven't drawn a midline in, but once we did draw a midline in, we got a projection and traded that. As soon as it got to that projection, the market has gone lower because the trend is unbroken. So we are still expecting lower lows in gold. If you get a big inverted head and shoulders, it will reverse downtrends, but this just isn't big enough. We've had massive, really important support lines breached on gold, and a small inverted head and shoulders like that is not going to reverse that trend because the more important them support lines are, the more significant it is when they are breached. And just to highlight what we think about gold, since we put in that rally from the inverted head and shoulders, the market has pretty much put in a few highs and we can draw a trend line. We can draw a resistance trend line. The market has hit it in the last session or two, and so far we've had a small little pullback, so it is respecting that. So what we are expecting is as long as 1250, which is a good horizontal support, breaks, then we do think that we will see lower lows in gold, and we'll probably see much lower lows in gold, probably heading towards the $1,100 per ounce mark, especially once that small support is broken. What we've done as well is we've drawn in a pretty much a support of a channel by connecting a few low points. You can see here a few lows that we've drawn a trend line down. It's not a parallel channel, so we'd have to readjust that slightly. So our stance in gold is expecting lower lows, and you can see how it's hit the bottom of the channel, top of the channel, and we'd expect another touch of the bottom of this channel, probably around the $1,150 per ounce, providing that small support line gets breached. But the trend is down, so if you are selling rallies in gold, then you are probably doing the right thing because we are seeing, eventual lower lows and lower highs. So we do expect gold to go lower, especially as the economy is improving.